So, good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated October 31, 2023. So, before we go ahead, I would like to give a small disclaimer that registration granted by SEBI, membership of BASIL, and certification from NISM is no way guarantee performance of the intermediary, provide any assurance of returns to investors. Investment security markets are subject to market risk. Read all the related documents carefully before investing. So, without taking up much time, I'll start with Nifty analysis for the past for yesterday and the past few days as well. So yesterday Nifty had a muted to positive opening, but it came under some selling pressure and gave up on its earlier gains and declined by 100 and 150 points. During the latter half of the day, it again regained momentum and managed to close near the day's highs or make a new high as well. From the O'Neill front, we are still in downtrend, but as you can see, we have already made a day two of an attempted rally. Why? Because the low that we made on Thursday, we are able to hold for consecutive 2 days. If one more day this low of Thursday gets held up, then we'll go to a rally attempt. From there, when we go to a rally attempt, after that, a follow through day, an FTD is required, that is an up move of 1.5% on higher on volumes higher than the previous day. Or else, reclaiming the recent high is required to go from rally attempt to a confirmed uptrend. However, on the flip side, if this recent lows gets breached, then we go back to a downtrend. As you can see, we are currently trading uh, well below the key moving averages of 100 DMA, 50 DMA, and 21 DMA. So, the nearest resistance at this moment is this pink line, that is the 100 DMA at this moment. Talking about key news, result season are in place, and we'll be talking about some key result. Uh, Triveni's Q4 FY24 PAT declined 97.9% YoY 29.1 crores. Revenue increased 9.9% to 1617 crores. EBITDA margin expanded 80 pips to 3.9%. Marico's Q4 FY24 results beat estimates. PAT increased 17.3% YoY to 360 crores. Revenue declined 0.8% YoY to 2476 crores, and EBITDA margin expanded to 80 pips YoY to 20.1%. Castrol India's Q2 FY24 PAT increased 3.8% YoY to 194.4 crores. Revenue increased 5.5% YoY to 1183 crores. EBITDA margins contracted 20 bips YoY to 22.7%. TVS Motors Q2 FY24 PAT beat estimates. Revenue was slightly below the estimates. PAT increased 31.7% YoY to 407.5 crores. Revenue increased 12.8% to 8144.6 crores. EBITDA margin expanded 90 bips YoY to 11.1%. Procter& Gamble Q2 FY24 PAT increased 36.5% YoY to 10.7 crores. Revenue increased 8.9%, and EBITDA margin expanded for 50 bips YoY to 25%. Talking about the global market update, US markets moved higher, more than 1% by all three indices, as uh, the US Fed upcoming meeting is to be held on this Wednesday and Thursday, and we're hoping a status quo, that is uh, rates to remain stable at 5.5%. And overall, the outlook is what is expected to remain positive in terms of lesser rate hikes and probably, rate cuts. In terms of the trajectory going forward, when the rate cuts would happen. And that is why the positive developments are expected to happen. And that is why the equity markets reacted positively towards the same. However, the Asian markets, all three Asian markets are trading lower. That is, Nikkei is trading lower by 0.2%, Shanghai by 0.2%, and Kospi by 1.1%. Even Gift Nifty is indicating a positive opening. Yesterday's close was around 19,140, and it's indicating a positive opening of around 60-65 points at this moment. As the market is in downtrend, so let's see how the sectors have built up, how the broader markets have built up at this moment. So when probably markets come to rally attempt and from there to a confirmed uptrend, we know, I mean, which sectors are performing well and which sectors are leading the pack and where the next set of leaders can come in place. If we talk about, I mean, first, the broader market indices, the small caps are still doing very well. As you can see, both mid cap and small cap are trading above the 200 DMA, 11.9% and 18.6% respectively. But small cap is the one that is trading above the 50 DMA as well. So that is a really good sign. Realty is the only one that has been performing very well for the past 6 months. As you can see, it is trading well above the 50 DMA and the 200 DMA, 3.6% to be precise and 22.2%. The other is just energy, which is trading marginally above the 50 DMA and very well above the 200 DMA. Barring your bank, which is showing signs of correction as it's trading below the 50 and the 200 DMA. All the other sectoral indices are trading above the 200 DMA. Major sectoral indices are trading below the 50 DMA at this moment, and there's, I mean, if we look at the market condition for them as well, major leading indices such as, I mean, the heavyweight indices such as bank, IT, financial services are, are in the correction phase. So that is why which these are the leading sectors or the heavyweight sectors, and these are the sectors that are actually putting pressure on the Nifty 50 index. And going forward, if these indices on the leading stock starts doing well, then automatically Nifty 50 will also get some kind of help from them as well. So thank you, and that's it from my side. And stay tuned to this page.